Natural gas continues to see volatility. Before we start, a quick word from our sponsor. This video is brought to you by XNS, the world's leading retail brokerage firm offering ultra-fast executions and no overnight fees. Look for a link in the description below. The natural gas markets have been all over the place during the course of the trading hours in the early part of Tuesday. We continue to hang around the $2 level, and that, of course, will attract a lot of attention. And we are in an area that historically has been somewhat supported. I think there's an area between the $2 level and the $1.80 level that people start to pick up natural gas because it's cheap. With that being the case, I also believe that we are in the midst of the summer doldrums, and therefore it's a market that investors will be buying little bits and pieces in and trying to do everything they can to build up a bigger position for the time down the road when temperatures plummet and demand soars in the United States. There could be a heat wave between now and then, and that, of course, will drive up the demand for natural gas, but the big move typically happens sometime in the fall. Because of this, I've been building a small and steady type of investment position without leverage. I'm using an ETF, and that is something I do every year. It ends up adding a few percent to my returns every year like clockwork. I don't put a ton of money into it, and in fact, it's very rarely more than 5% of my portfolio. However, that also means that I can ride out the volatility and the day-to-day actions don't mean much. Keep in mind that natural gas is a uniquely American contract that most of you are trading, so unless you know the ins and outs of the natural gas markets in America, which are more fundamentally driven than technically, you need to be cautious. If you enjoyed the video, give me a thumbs up and subscribe.